The artificial intelligence boom appears to be entering a new and potentially risky phase. Companies built around AI are attracting valuations so massive that investors are reportedly beginning to ask whether markets creating a major bubble. Now, Anthropic, the company behind the Claude chatbot, has taken a major step towards a US stock market listing after confidentially filing documents with regulators on Monday. As per reports, the company could command a valuation of nearly $1 trillion in the initial public offering, potentially reaching Wall Street before OpenAI, the creator of ChatGPT. And questions surrounding the AI surge persist among domains. Elon Musk could soon become the world's first trillionaire if targets linked to SpaceX are achieved, with SpaceX expected to pursue a US listing later this month at a reported valuation of $1.8 trillion. But a top research firm, Morningstar, says that the number is simply too high. The American firm has initiated coverage of SpaceX with a value estimate of around $780 billion. And that is less than half of what SpaceX is asking investors to pay. The firm claims that the shares are likely overvalued at the proposed IPO price, and adds that any valuation which is above $1.5 trillion would make the stock overvalued under almost any near-term scenario. Furthermore, at the $1.8 trillion valuation, SpaceX's price-to-sale ratio exceeds 90 times, far above the industry norm of below 30 times. Well, these staggering numbers are also raising concerns among experts. Market watchers are drawing parallels with the dot-com era, one of the most famous examples which remains Global Crossings, and the telecom company's valuation surged to $47 billion in 1999. During the internet boom, despite never posting an annual profit. It eventually filed for bankruptcy in 2002 after the dot-com bubble burst. Analysts warned about what they call the impossible math surrounding some major AI companies. They pointed to the billions being poured into data centers and AI infrastructure and questioned whether current business models can generate sufficient returns. Experts say the big test will come after the major AI companies list publicly, when investors gain a clearer view of their finances and performance.